Hey, good afternoon, traders. Today is Monday, August 28th, approximately 5 p.m. Eastern Standard Time. And I know I did not bring a weekly wrap up on Friday, as is usual. A couple reasons for that. Bitcoin's kind of been trading in a sideways pattern, sort of boring from my perspective. The other reason is I got a little bit of a head cold here and wasn't really feeling up to the task at that point. Considering there were no major updates, I thought I would skip the Friday, and we'll try to do a quick update here on Monday, what I'm looking for the rest of the week. All right, so as we know, technical indicators are now showing that we have entered into a bearish trajectory. So some of my followers have asked me, well, why am I still long if that's the case? And where am I looking to sell? And so that's what I want to get into for the purpose of today's video. Jumping straight into the chart here, here's Bitcoin and a couple of things. First of all, I'll start with the history of my most recent stop outs. And so a lot of you know that I had been long up here as long as we remained above the channel. It looked at that point that the 200-day was coming up to help out here, providing us a good area of confluence and very strong support. So obviously I was taken off guard and a little bit caught by surprise at this sell-off. We still don't exactly know what the catalyst was for the sell-off. We know that a lot of longs were liquidated, and it could have been the domino effect there. Some people were blaming Elon Musk and SpaceX for selling $373 million worth of Bitcoin. Some people speculated that Evergrande, a Chinese real estate company which has a lot vested in Bitcoin, they went bankrupt, and so that was a catalyst. And then there's the deal with the third largest wallet now discovered on the blockchain. Has suddenly risen, and nobody knows whose wallet that is. Now, some people have confirmed that this is a Robinhood wallet. I don't know that you can know that for sure just yet, but at any case, there could be. We know that the big fellas, BlackRock, Citadel, Robinhood, they're all involved in the market now. So there's going to be the amount of manipulation that you see in the stocks has unfortunately transferred over to crypto. It used to be, in the old days, I used to be able to do this technical analysis, and crypto followed these indicators precisely. It was really easy, a lot easier to do. It's not so much the case anymore. Anyways, I say all of that because I'm not so sure anybody knows what really the catalyst was to break us below this big wall, this big floor of support. Anyways, I happened to be sitting at the screens on the night that this collapse occurred and realized that all of my crypto was stopped out, and most of it I was able to buy back in at a discount and am in the profit now. The exception here, one exception at least, is Bitcoin. You can see the green, where the green transitions into red. That's where I bought, somewhere in there around 26,200. And down here, we're seeing a lot of buyers step in right around the $25,200 level. My followers know what that level is because we have talked about it a lot in the past, and we have depended on it as a support in the past. So really, I'm going to just review this real quick. We had an inverse head and shoulders pattern here. All right, this was telling us that the price, once it broke that, what I call the neckline at 25,200, it was going to move up rather quickly. It did, but it ran its head into this resistance, this descending line of resistance, this trend line here. And so at that point, I was telling my followers, yeah, we're going to come back down, do the classic retest and test that neckline. We did that. We touched, and as soon as we did, we took off. Look what happened here. I hope, let me zoom in here so you can see this better. I hope you guys can see that. All right, so we retested that neckline at 25,200, and I thought we were off to the races at that point. Of course, we ran into our resistance at 31,600, 31,500. Some people have it marked at. And at that point, I was telling my followers, okay, this looks like it appears to be forming some sort of possible M pattern. Thought we might bounce from that support, which the 200-day moving average, as I stated previously, was coming up to help us with, and retest that 31,000 and at least form an M pattern. That's why I was long there. Excuse me. I was hoping that we would get that retest of 31,600. Wasn't necessarily sure that we would break it, but hoping that we would at least retest it before we come back down and retest this support. And then at that point, if we're going to break it, I was expecting us to break it up here somewhere before we come down. All right, so that is why I was long initially. So now that obviously that M pattern did not play out. Instead, we just, Bitcoin threw us another curveball, as it likes to do from time to time. And lots of longs got liquidated all the way down right to that neckline, almost at 25,200, where we bounced. Whoops, wrong one. Where I need to get out my pen here. Where we bounced quickly, all right, from that level. And as soon as I could get back in, I was busy getting back into some of my other alts. I got back into Bitcoin, and now I've moved that level. So 1 second, I was able to get back in at 26,300-ish. All right. So now what am I looking at? What am I waiting for? Where am I going to start to sell? Well, first of all, take a look at our level on the RSI. We are still in oversold territory a week and a half later. That, my friends, rarely, if ever, happens. It does happen. I don't know that I've seen Bitcoin be so extended in the oversold territory. Even in past bear markets, yeah, we've been in oversold territory for up to a week, but now we've been in here for like a week and a half. Actually, there's 12 bars here, so we've been in this area in oversold territory on the RSI for 12 days straight. So again, I was expecting quite a bit more at least an earlier bounce, and we still haven't had that. We still remain in oversold territory. So I still expect a bounce, but the longer the time frame goes, the less severe, shall I say, the bounce is going to be. Nevertheless, this is what I'm playing. I'm playing the bounce. It's my rule of thumb that I don't sell a position when we're down here on the daily in oversold territory on our RSI. And that is where we remain. So I don't sell until we see something move back up into this basically this purple area here between 30 and 70. That's where 95% of our trading takes place. And that's what I'm looking to see us move back up into. Along with that, I would expect the price to jump back up. Now, we do have some big resistance ahead of us here between two levels, a level of 26,300 or 375, and another level here at 26.5. So those two levels are providing us some big resistance there as well. But I'm expecting that once we move back into and above the 30 territory on our RSI, that would coincide with a move above that, and at which point we can run a little bit. Okay, but you will note that we have our 200-day moving average overhead. That is now going to provide us some resistance. So I'm not quite sure how far or how quickly, if we do move above that, we go. We like to come back and test previous support as resistance. So I'm thinking we go up here and hit our heads on the underside of that channel, which now becomes resistance before falling further. but I'm not sure how that will look because we do get, we have to go back above that 200-day moving average. Now I'm going to take you to the weekly real quick because we're going to look at something interesting there as well. So here we are on the weekly, and take a look at that red line above us. That is the 200-week moving average, and look at the price there. Right now we are sitting at 27,600 approximately, a few dollars short, but 27,600. I want you to keep that price in mind. So here we are back on the daily, and look at the 200-day moving average. That price right now sits at approximately 27,450, only $150 short of what we were showing on the weekly. That also indicates there is going to be a ton of resistance up here at the 200-day moving average, as well as over here at the 200-week moving average. Anywhere between 27,450 and $27,600, you are going to see some resistance, heavy resistance, in fact. So what I may start doing here, as soon as we start moving up above those two levels and hit our heads on that 200-day moving average, I take a little bit of profit off the top there. I move my stops up and let the rest ride out at a break-even stop limit. I want to see us come up and test the underside of that channel, but that remains to be seen. Sometimes we don't exactly get that, and you'll see this 50-day moving average is coming down as well. So if we hit that 50-day moving average, that may be where I unload all of my crypto if we can get to that level. Otherwise, I take 50% off at that 200-day moving average, or anywhere right now between 27,450 and 27,600. Move my stops up to a break even and let the rest ride. We'll see what happens. Okay, so now the question is, can we look to other charts to correlate the data we're seeing on Bitcoin, expecting that bounce? Well, this is our dollar chart, and you can see the dollar has hit its head on resistance and looks to be coming back down, at least for a short period of time. Additionally, you can see here on the RSI chart, let me grab my arrow and point to the area of focus. I have a little bit of a ascending triangle drawn. That may not be drawn precisely the way it should be drawn. Nevertheless, it is an ascending triangle that is bearish. And once we break the bottom of that trend line, I do expect the dollar to continue down for at least a short amount of time. If I zoom out here on this price action chart, you can see that I drew a left shoulder, a head and shoulders pattern. This is the left shoulder, and all of this over here can be considered the right shoulder as long as price does not break back above 105.6. So continued weakness in the dollar would indicate that price may move up in stocks and then flow over to crypto, provided the VIX agrees with us. Let's take a look at the VIX. All right, so here you can see the VIX. I have an M pattern drawn. All right, so what does this mean? Well, M pattern is typically considered a double top, and you can see we wicked up, tagged the 200-day moving average very quickly, and now have come back down into range. All right, this is an all-time 2-year low, this orange box here, where the VIX has remained the last month or 5 weeks, something like that. And you can see here I have a channel drawn on the RSI. That is a bearish channel. We have actually broken down below that. I have that area circled where we're currently at. So I expect us to continue back down. That means fear is being suppressed, or is receding, I should say, in the stock market. So what happens when both the VIX are down and the dollar is down? Typically we see price action go up in stocks, and that price action or the stock market going back up tends to carry over into our crypto. So next, let's just take a look at the SPY, which we are using to track the S&P 500. And you can see here initially what looks to be a bear flag. Let me get rid of my drawings and we'll start over here. All right, the bear flag that I wanted to point out is right here. And a bear flag is when we bounce a little bit, and then I expected us to come back down and test or tag that 430 level here on the SPY. But if we zoom into the 4-hour chart, and this is the 4-hour chart, you see something a little bit different. This shows what appears to be a W pattern or double bottom. And if that is correct, then the synopsis would be we'll come back up into this orange area. Maybe we'll bounce around within this orange channel area for a little bit while we're ascending. So that would make sense in correlation with the data we're seeing on the dollar, which appears to be in a downward trend. Now this is the 4-hour on the dollar, and the VIX, which also appears to be in a downward trend. All right, so when the dollar and the VIX are in a downward trend, SPY tends to be on an upward trend. And what happens in the stock market flows on over into our crypto space. And therefore, I think it's very reasonable to expect a bounce here in the next week or so. We can't stay down here in oversold territory forever. So I can expect at least a little bit of a bounce, and I would think it's perfectly reasonable to see us tag that 200-day moving average, at which point, like I said, that's where I move my stops up to break even and take at least 50% off the table in terms of profit. Apologize for the slight cough there before I was able to pause the video. I've been trying to pause and get the coughs out during the pause, but I may have got you a little bit in the ear with that last cough. Anyways, hopefully I can get over this and proceed forward with my videos. I hope what I've said makes sense to you. To quickly recap, the dollar being down or growing, looking like it will go down for the next few days, along with the VIX being down, equals SPY in an upward trajectory, and that carries on over into the crypto space. All right, so again, it's perfectly reasonable to expect a bounce here within the next several days / weeks. I hope you enjoyed the video, and if you did, please give me a like, comment, and if you didn't, dislike the video and give me a comment as well. Any feedback I receive only helps me produce better productions in the future of these type of videos. Until the next video, peace, y'all.